So, of course, everyone's been deeply concerned about UST, Terra. What is a stablecoin? What is an algo stablecoin? And can we even trust them? That's what we're going to be looking at today. This is actually a two-part video. In this first part, we're going to be looking at the big institutional big boys. Tether, USDC, Binance USD, and around the side, Paxos. In the next part, we're going to be looking at some of the sketchier ones, the crypto ones. I mean, I say sketchy, everything's a risk, right? But we're going to be looking at Maker and that token DAI. We're going to be looking at Frax, and we're going to be looking at magic internet money from Abracadabra. That's all part two, but for this first part, we're going to be looking at the monsters. And if we look at the CoinGecko stablecoin by market capitalization chart here, we can see Tether in first place. $73 billion in market cap. USDC from Circle, $53 billion. Then Binance USD, let's get it right, $18.3 billion. DAI, $6 billion. That's extraordinary for an ETH-backed stablecoin. And then Frax down here. So we're really looking at the top six. The Pax dollar, which is down here, is a little under $1 billion. We'll be looking at what that is and why it's important in a little bit. And then this extraordinary stablecoin, Terra USD, still up in number 10, 0.06 cents now. How the mighty have fallen. So let's get straight into it. What we're looking at here is how do we judge the validity of these stablecoins? There are various different strategies you can use here, but primarily you're looking for a few key things to give you confidence that the stablecoin is indeed what it says it is. So the first thing we're going to do is look at the Paxos homepage. This is Paxos. Here's Pax Gold, which is a gold-backed coin, which you can redeem for real gold, believe it or not. They have a few different products here, basically to do with custody, and if they've got an exchange as well, and a brokerage. But the one that's really interesting is the stablecoin as a service down here. So a branded US dollar-backed stablecoin to power your global business. And if we click through here, this basically is a white label solution for you to issue your own stablecoin. I mean, I say for you, like anybody can, not everybody does or has the means to do so, but Binance definitely did, and BUSD is built on Paxos. Let's just go back here and look at some of the details around this. USDP is the Pax dollar. It's the world's leading regulated stablecoin, and that word regulated is very important when it comes to Paxos because, as they say here, they're subject to strict regulatory oversight by the New York State Department of Financial Services, meeting the highest standards of consumer protection. They're based in New York. They're regulated by the New York State Department of Financial Services, and that's probably a good thing. It means that they're in one of the toughest financial jurisdictions in the world. And if you've seen the show Billions, the Southern District of New York, Chuck Rhodes, they're the ones that tackle the highest level of financial crime. That's where Paxos is based. So you would imagine that they've had to work pretty hard to get that level of regulatory oversight. There's also a danger here because given that New York is one of the toughest financial sectors in the world, and given the way that Yellen and all of the Fed are looking at stablecoins, they could be first in the firing line when it comes to tougher regulation. But of course, they're doing everything right so far. At least they say they are. So USDP is redeemable one-to-one. You can convert USDP to equivalent US dollars at any time. Paxos offers unparalleled assurance to consumers that their USDP is backed one-to-one by the dollar. And that should be the promise of any dollar-backed stablecoin. Looking further, let's look at Binance USD. So this is BUSD, a new stablecoin issued in partnership with Binance. It's not that new anymore. You can get BUSD one-to-one for US dollars or Pax on the Paxos platform. To do that, you create an account. You have to go through some KYC, but then you can convert between US dollars, BUSD, and Pax one-to-one anytime with zero fees. No fees for doing that. So that's kind of an interesting one. It offers the same regulatory oversight as Paxos. And if you want to dig a little deeper, you can get into the monthly attestation reports. And this is really important. So it's basically they hire an accountant. The accountant goes and looks at the reserves and says, okay, you have enough to back up the claim that one digital dollar can be redeemed for one actual dollar. And that's what's going on here in these attestation reports. So it's very important to go and have a look at these and see whether they actually exist. So Pax has them, Binance USD has them, and Pax Gold has them. If we look at the Binance USD attestations, we can have a look at the one from April 29th. Here's what it looks like. So this is Witham Audit Tax Advisory, and it's not a very long document. And it basically says, we've examined Paxos Trust Company assertions. Our responsibility is to express an opinion on management's assertions based on our examinations. They're supposed to be independent. And the reserve accounts report refers to the total supply of BUSD tokens, as they're noted under contract at 18 decimals. The reserve accounts report refers to the accounts held by the company. And the reserve funds are at least equal to or greater than $17,651,702,084.31 at the report date and time. So this doesn't contemplate the impact of outstanding checks, wires, deposits in transit, or other reconciling terms. So what it's saying here is there is enough to cover a complete one-to-one redemption of the entire BUSD supply should such a thing be required. Now, obviously that's never going to happen, but it needs to be there in case it ever could happen. So what we can see here is BUSD tokens and then US dollars and amounts backed by US government guaranteed instruments, T-bills in this case, is equal to this. So it's pretty common for stablecoin providers to take some of their US dollars and invest them in treasury bills or other debt-based instruments where they can make a bit of money. In the case of Tether, for instance, well, they really went to town on that and tried to make a ton of money. But as long as it's at least or equal to this, then you should be good. So those are those attestation reports. And that is really one of the things you should be looking at when it comes to the validity of the reserves, or at least what they're saying about their reserves. Witham is the accountant. I had a look into Witham. They seem to be very legit, very well respected, a proper accountancy firm. They have more than one client, as you'd hope. And they've got a big old team. They were operating in a lot of different industry sectors. This is not a shop where you think, okay, they're just kind of a boutique firm hired because the stablecoin provider couldn't hire anybody else, though this is a legit accountancy firm. And here's what their recruiting film looks like.
Choosing Witham for my career was a no-brainer. Their culture is second to none. They offer team member benefits like open time off and remote work plans.
Well, look at that. I mean, we won't judge them on their videos, but hey, what I love about Witham is you can experience the Witham way. It's a forward-thinking, technology-driven advisory and accounting firm helping clients to be in a position of strength. They've actually taken be in a position of strength and turned it into a service mark, which is a bit like a trademark, but they really want to own that. Be in a position of strength. Well, bully for you. Okay, let's move on to USDC now. This is the USDC website. It's Circle, the issuer. Digital dollars for global business, and they're very clear to tell you that they have 53.2 billion in circulation. And as you can see here, the rise up from 2019 has just been nothing short of extraordinary. This really reflects the rise in DeFi and an interest in stablecoins as yield-bearing tokens that could, generate a stable yield for you and do all sorts of other things in the market. But really, it also reflects the growing apprehension about Tether as well. There really needed to be a viable and trusted, I guess, alternative to Tether in the market, because there was always this worry that Tether would implode and take the whole of crypto with it. They make some big claims here. USDC is transforming finance. I don't think it is. How businesses can access USDC. They've even done some 10 stablecoin myths busted. They're really working hard to keep everything on the nice and nice. Circle yield we'll come back to in a second, but we are looking specifically for transparency and compliance down here. So here's the USDC in circulation, $50.6 billion or 52.9 now. And then the USDC reserves, cash and short duration US treasuries. That gives you the makeup. So not a huge amount of cash compared to the number of T-bills in there as well. And then they give you an idea of the redemptions that have been going on as well. USDC redeemed 6.3 billion. Not surprising given the way the market was. But if we actually go back to this, we can see that the Tether supply has been dropping, and there've been quite a lot of redemptions on Tether as a result of the happenings from the last couple of weeks. But the increase in USDC has kind of matched it, so that people are moving clearly from one asset to another. So that's USDC. What else can we learn about USDC? Some interesting things. We scroll down a bit further. Let's kind of have a look at one of these attestation reports. I've got one up here. So the accountant here is Grant Thornton, massive company. Clearly should be one you can trust, although massive doesn't necessarily mean trustworthy. HSBC, I'm looking at you. But again, we see the same kind of language here. We've examined management of Circle Internet Financial LLC's assertion that the following information is fairly stated based on the criteria set forth in the reserve account report. Same thing again, when this report went out, $51 billion in USDC. The total fair value of US dollar denominated assets held in segregated accounts are at least equal to the USDC in circulation at the report date. We don't know the excess. That's the thing. What profit are they sitting on? We don't know. That's not reported in the attestation report because they don't need to. So something else we're looking at here is Circle Yield, which is basically a way of earning yield on your stablecoins. If you are someone who's interested in FIRE, the Financially Independent Retire Early movement, then generally in the FIRE strategy, you're looking at kind of 4% as a base mark for how much money you need and how much you want to live on. And so 4.75%, normally you'd be doing this through dividend paying stonks, but if you can do it on stablecoins, then that's could be an interesting alternative if that's kind of what you were looking to do. So over 12 months, it's 4.75%, over 6 months, 4.55%, and then over 1 month, 1.25%. And you can actually go through and look at what a $1 million investment would give you over the course of a year. $47,500 would be how much interest you would earn over 12 months. And could you live off that? Well, I think you probably could. So, getting $1 million together, putting it into USDC and then living off the interest, it could be a thing, right? It could be a thing. If you put a 1 month fixed term, you're going to earn $3,500. I mean, it's not terrible, is it? When you look at it like that. So, obviously, one of the things we have to make sure we look at is where is the yield coming from. So this is a crypto-based investment vehicle that is fully secured by Bitcoin collateral and can earn high yield compared to traditional bank rates because of that collateral. I didn't dig into exactly how they were doing that, but this is all how they do it. So your Bitcoin collateral is kept safe with BitGo. And our partner is Genesis Global Capital. There's more information down here about all of that. But yes, and this they say it's a fixed rate of interest. It can kind of move around a little bit, but primarily I think it's 4.75 is what they can actually deliver comfortably. One other thing to think about with USDC is blacklisting. So it is possible to have a USDC asset blacklisted or an address blacklisted so that you can't actually move the USDC out of it. So imagine you're a money launderer or you've hacked a DeFi protocol and you convert into USDC. It's quite possible that you could find yourself unable to then move that USDC into anywhere where you could turn it into real money or do anything else with it. Here's a June dashboard where you can see a list of the banned addresses. Not many, 38, but significant. And when USDC and when Circle wield that axe, it's another blow to the meme of decentralization, because this is not decentralized at all. This is supposed to be a decentralized permissionless asset. It's not. If they can wield an axe, blacklist an address, then it is not that. But what it is a middle ground and seems to be growing daily in traction to the point where it might well flip and Tether, which is where we're going to go next. Ah, lovely Tether. Somehow they're still here, somehow still going, somehow, despite all the FUD that's been thrown at them, they just kind of keep going. And it would be trite to say that, the longer they go on, the more legit they must be. But, they are still here and they are still presenting the same face to the world. That is, Tether tokens are pegged 1-to-1 with a matching fiat currency and are backed 100% by Tether's reserves. The nature of those reserves is the thing that gets everyone very, very nervous. Well, I say everyone. Some people don't give a fuck. But, most people with a brain in their heads are kind of going, well, do they have what they say they have? So they just released a blog on May the 19th, obviously in response to what was happening with UST, to once again reaffirm that Tether's reserves are fully backed. Well, what does that mean? Well, it means they're backed by stuff. Some of it's dollars, but some of it isn't. So you give Tether $1 and they go, okay, thank you very much. Here's a USDT. And then they add that to their reserves. And then they go and deploy those reserves buying stuff. Well, this is very similar to what a bank does. But the nature of Tether's holdings has always been a little bit opaque. So what we're seeing here is an approximate 17% decrease in its commercial paper holdings over the prior quarter. So they've dramatically reduced that. And basically, the attestation report is saying, yes, they have the reserves to at least cover redemptions for the entire USDT supply. And here we can see the reserve breakdown. So there's this big green line here, which is 85.64% are cash and cash equivalents and other short-term deposits. Then we've got 4.52% in corporate bonds, 3.82% in secured loans, none to affiliated entities. That's very important. So they haven't loaned anything to Bitfinex. There's no outstanding loans there. We'll get into why that's important in a second. And then this big green bar can be broken down even further. US Treasury bills make up 55.53%. And traditionally, T-bills are seen as kind of the most conservative, safest thing to buy because the US government is not going to default on its debt. But hey, stranger things have happened. Then 5.81% is cash, actual cash. So very little of the dollars that have gone in are kept as dollars. Then around 10% in money market funds. And then 28.47% still this commercial paper and COD. So there's still some risky stuff going on there, but they are reducing it down. The attestation reports are from Moore and then MHA Cayman. Moore actually rebranded to MHA Cayman. And we can take a look at those reports. Look at that. In accordance with our engagement letter and its terms and conditions, we are reporting to the management of Tether holders and its wholly owned subsidiaries that we have examined the assertions in its consolidated reserves report. In our opinion, is fairly represented in accordance with the criteria. So all the same kind of language, just in a slightly different way. MHA Cayman, though. Let's have a look. So Moore Cayman, which is what we saw before, is now operating under the MHA Cayman name, but the firm's parent is under investigation in the UK. Poor Tether. There's always seems to be some kind of story surrounding them. This is MHA Cayman. They are the Cayman Islands subsidiary of McIntyre Hudson, which is actually a UK-based company with lots of offices and lots of clients. But the Cayman Islands office itself apparently only has 3 employees, which does tell you something. I wonder if Tether is their only client. It's entirely possible, but a very small firm, boutique, operating in the service of one specific company with a lot of money to swing around, it makes you ask some questions, right? The other thing we were talking about is this. Cryptocurrency firms Tether and Bitfinex agreed to pay an $18.5 million fine to end the New York probe. So the NYAG was looking into Tether last year and going in deep, very, very deep. And it got a little bit testy in court, but Tether settled. So there was allegations that they tried to cover up $850 million in losses between Bitfinex, and Tether was basically propping Bitfinex up, but not declaring it. All sorts of strange things going on, and so much information, so much evidence to suggest that something bad was going on. But what seems to have happened is that Tether cleaned up their act to a degree. They've settled with the NYAG, so that's gone away. And now I guess they're just still there. So one of the things about Tether is that you can't just go and redeem one Tether for $1. You can't just say, hey, I want my dollar back. There are some restrictions. So you have to set up an account. And then there's a $150 fee for KYC and AML. This is basically so that they filter out people who aren't serious about USDT redemptions. Okay. And also there's a limit. So you have to redeem $100,000 or more in order to actually redeem on Tether. But there is another blog post here where we can see that they're very, 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 very kind of bullish on their ability to maintain their peg. They say, thankfully, all one needs to lose, look at the history and track record of Tether USD. And that's what I'm saying. Basically, the longer this goes on, it's kind of a Lindy effect goes on. And the longer they survive, the longer they must be legit. And, well, yeah. So since 2015, Tether has never failed to process a redemption request for USDT at a value of $1 per USD token. And that's primarily because the only people that ever redeem, and ever try to redeem, are those in small enough numbers that they can actually do so. So there's never really, it's quite difficult to get a redemption on Tether, so most people don't bother. But apparently they have since 2015. Make of that what you will. One last thing to look at with the USDT is the banned addresses list. So there's another June dashboard here, and we see 656 banned addresses. So there's always been this FUD around USDC that they can blacklist, but Tether can also blacklist and does so. So there are 636 addresses here which have been banned, and you can look into those and see what was going on there, but primarily it was to do with money laundering, as it always tends to be. So this is part one of our How to Investigate Stablecoins series. In the next part, we'll be looking at DAI from the MakerDAO. We'll be looking at Frax with its fractionally collateralized stablecoin, partially with collateral, partially with algorithms. And then we'll be looking at Abracadabra and its magic internet money and how they collateralize the stablecoin with yield-bearing instruments. So that's it. If you have anything you'd like to say to us, drop them in the comments below. I hope that was helpful to you. And if it wasn't, well, try watching it again, but faster. That's it for this week. Catch up for us for this follow-up next week. And as always, get subscribed, like, drop us a comment, do all those things and help us grow the channel. Thank you so much. I'll see you on the next one. Peace. Is your crypto sitting idle without earning you any passive income? On Nexo, you can maximize the value of your crypto in no time and earn rates of up to 17%. Their web platform and mobile app are super easy to use. You can buy crypto with your card instantly and start earning interest paid out daily. The Nexo exchange has over 300 market pairs. Every time you swap or buy crypto, you get up to 0.5% cashback that's automatically added to your wallet. If you want to finance buying a car or a trip to a faraway place, you can borrow cash by using your crypto or NFT as collateral. You don't lose your crypto, and you can get borrowing rates as low as 0% APR. Nexo has over 4 million users worldwide, and their platform is equipped with a top-quality security infrastructure designed to ensure maximum protection of assets at all times. Go to nexo.io and get started today. Decentralization of Ethereum gives us security, Layer 2 protocol, Arbitrum gives us low-cost transactions, TracerDAO's perpetual pools gives us liquidation-free, long-term leveraged tokens. The combination of all three of these unlocks the full potential of DeFi. Using Tracer, you can take long or short positions with leverage to trade anything: commodities, cryptocurrencies, equities, even NFTs. Dive into perpetual pools at tracer.finance and learn more about this exciting release with The Voyage, a 6-week journey in Tracer's perpetual pools to earn TCR rewards and explore the potential.